Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And I got to tell you, I'm particularly excited about this discussion. Let me give you a little bit of insight into the background for how I prepare for these webcasts and what got me excited today as I was preparing. When I have an idea about the sort of thing that we're going to be talking about, we're going to be talking about an exclusive indicator that's only found on Thinkorswim. Well, I always go to just the internet and I look around and read up on what others are saying about that indicator, maybe to see if someone has a unique angle on that indicator, see what has been introduced already and what hasn't been discussed. And, with this one, it was very interesting because try as I might, I could not find another video discussing this indicator. So we're talking about an indicator, a technical study that can only be found on Thinkorswim, and there are no other videos discussing it. So I think that's pretty exciting. But it's known as the price time filtering bar count indicator. Bit of a mouthful, but not quite as complicated when put into use. So I think this is going to be a great discussion. Before I get to that, before I get the details of that indicator, let me first of all say hello to everybody who's already chatting in out there on YouTube. Great to see so many familiar names. Hello there, David and Posh, Kevin, Janelle, Grace, Ricebird, Will, everybody else. Thanks for joining us week after week. I always say, and I always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, though, I want to welcome you as well. And if you're joining, or if you're watching this webcast after the live stream is concluded, enjoy the recording, but be aware that you're invited to join us in the live stream. This is a webcast series that's presented live on Fridays. We kick it off promptly at 1 o'clock Eastern time. We'd love to have you here in the live stream audience if you'd like to join us. And as a nice little treat there for our live stream audience members, my very good friend Mike Fairborn is going to be hanging out in the chats with us. Mike and I have been working together now for about 18 years, believe it or not. So Mike's a great resource to have. Thanks for having my back there, Mike. And Mike and I would like to issue an invitation to everybody watching. If you have an account on X, you should be following your favorite Schwab presenters there. It's the best place to connect with us in between these live streams. You can find Mike there at Mike Fairborn CS. You can find me on X at Cameron May CS. All right. So let's get into this discussion. And I don't even know if I should have asked this question because I think I already know the answer. Is anybody out there familiar with this indicator known as the price time filtering bar count tool? Chat in. Let me know. Maybe somebody will surprise me. But I think this is going to be new for just about everybody. But just please keep these important disclosures in mind. Risk is real, so we need to have that in the back of our minds as we're discussing these things. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including loss of principal. All right, this is what I thought. Josh, no, I haven't heard of it. Jay Richardson, never heard of it. Posh, no. Chris B, no. Tatiana says, not that one, and on and on. I think you get the theme there. So we are going to be introducing this tool. It's not a new tool. It's actually been on Thinkorswim for about 1.5 years, I think. But it's going to be new to just about everybody listening to this webcast who turn to videos like this for learning about technical techniques because nobody's discussed it before. So we're going to be talking about how it's built, how it might be used. But before we do that, we need to be aware that this video is part of an ongoing series about using charts for trading. And so we're going to be taking a look at an existing trade that we already have in place, see how it's coming along. We're then going to take a look at what's happening with the S&P 500 using a set of technical tools that we use each week. And then finally, we're going to get to that discussion. The first two parts of this, by the way, are only going to take a few minutes. We're going to dedicate the bulk of our discussion to examining how the price time filtering bar count tool is built, how it might be used to identify trend, and how it might be used in combination with another technical indicator to create a trading system using charts to plan in place. In this case, we're going to be doing stock trades. All right. So let's go right to Thinkorswim, and we are going to have a look at our existing position on SMCI. I was out of the office last Friday, so Mike, you filled in for me, didn't you? I believe that's right. In any case, yeah, it's been a couple of weeks since we followed up on this trade, so let's see how it's coming along. We own 100 shares that we purchased for about $44. Oops, those are down to about $40 per share. Here's what's happening with that position. Let's go to SMCI. Bunch of drawings on the charts. I'll explain that in just a moment, but let's load up. Let's go up to our studies, load up the study set that we used to plan this trade, which was actually the market forecast tool. And what we noted with this stock is it had a pretty good history when there was what's known as a market forecast cluster on this chart. It did a pretty good job, at least recently, historically, at indicating that the stock was about to go for a nice run to the upside. You can see that here, a cluster here, preceded or predated a nice run up here and here and here. But what you'll notice is it's not exactly precise. In 3 of these 4 examples, it was early by several days. So we allowed for that, gave this some wiggle room down to a stop. And it looks like, yep, that's what's happened. Our stock started to go up. It's actually pulled back down below our entry price a bit, still holding above this price floor. We'll see if that holds, but we do have a stop in place down here at $38. Our target is up here at $62. Now, if you weren't here for the planning and placing of that trade, the nice thing is this webcast series, our webcast, these sessions are recorded and then they're posted to our YouTube channel. So do yourself a favor. If you haven't subscribed to our YouTube channel just yet, do that right now. Just go down the lower right-hand corner, click on subscribe button. It only takes a second. You can be done like now, and it doesn't cost anything. But our Trader Talks Schwab Coaching webcast YouTube channel is where we house the playlists for the already completed videos from previous webcast discussions. So you can find those right here. You just look up on YouTube, Trader Talks Schwab Coaching webcasts, go to the playlists, and then find the series of interest. Now, this one is called Advanced Charting Techniques, and we have quite a few series, but I'll show you where this one's found. You can scroll down the playlist about halfway down. You'll see Advanced Charting Techniques right there. We can click on View Full Playlist, and then we can see scanning for the rare market forecast cluster trade signal. That was the name of the video where we planned and placed this current trade. Chris, you pointed something out interesting. Yeah, I noticed that this morning as I was reviewing the SMCI trade. Chris says SMCI actually made 2 more clusters since the entry. That's right. Yeah, let's go back here. You'll notice here was our entry. We actually saw our 2 shorter term oscillators race up but pull back, get back down in our oversold area. And right here, all 3 of our stochastic oscillators were under 20 on the same trading day. So as I point, like right here on August 29th, if we look up at the values of our oscillators, what we're looking for are values below 20, indicating oversold conditions across 3 time frames. And that's what we see right there. There it is, August 29th. The momentum line was at 2.5. The near-term line was at 11. That's the blue line. The green intermediate line was at 11 as well. We saw pop up in, I think they both got up out of that upper range. But in any case, if we go forward to, what date is this? The 3rd. 9, 18, and 7. Yep, all below 20. So pretty good cluster of clusters there. So we'll see if this one works out a little bit better. Maybe this turns out to be the low. Time will tell. We do have a stop in place. Creeping a little bit close. It's kind of getting uncomfortable around here. A couple of dollars of wiggle room left there, but a lot of upside potential if this trade can just get up and go like it has done in the past. We'll see. Time will tell. So that's what's happening with our current trade. Now let's go have a look at what's going on with the S&P 500. So I'm going to in the SPX, and what this does, the purpose of this point of the discussion is just to provide some context for the sorts of trading conditions or market conditions that a trader who's using whatever indicator might be trading under. And for some, there's an important decision to be made. Are the markets bullish if I'm about to do a new long stock position, or are they tilting toward bearish? So we use a combination of technical indicators in this series. It's just an example combination, but I keep it consistent from week to week to show how a trader might just be consistent with their approach. So let's go up here to our studies, and I'm going to load up a different study set. Let's load up our SPX TVM strategy set. Stands for Trend, Value, Momentum. Now, I'm going to park those there for just a moment, because if you weren't here when I explained how this system is built and used, that can be a little bit of a disadvantage, but that is also archived. So we could come here to this list of archives for the series. We can scroll down. This was actually discussed about 8 months ago. So I can just go down here and look where it says 8 months. Here's 7 months, 8 months. There's our Understanding the Trend, Value, Momentum TVM chart trading system. A quicker way to find it, though, is if we're just on the channel and we know what we're looking for, we can just type in keywords, do a search. Let's type in TVM, hit enter on our keyboard, and there it is. Understanding the Trend, Value, Momentum chart trading system. All right, so let's go back and look to see what that might have to say to a trader about current market conditions. Now, as we do, let me again hit the pause button, because I just noticed something that just popped into the chats for the benefit of those who are here in the live stream discussion. And that is, and we don't get this all the time. It happens every once in a while. I just saw a survey has been added to the chat window. So if you're in the live stream right now, if you're in that audience, click on that survey. That'll populate the survey. You can fill it out after the webcast is over, and you can give me some honest feedback then. Let me just tell you a couple of things about that survey, and then we'll get back to the discussion. Number one is a very short survey, 2 multiple choice questions, and then a comments box if you want to leave some comments, and a suggestion box if you have some suggestions for future webcasts or for the improvement of the series overall, whatever. But here's what I'll tell you. Even though it only takes a couple of minutes to fill out that survey, it's always beneficial directly to me. It's never a wasted effort, because that data and those comments are forwarded directly to me, and I read through them. So thanks for filling that out, Mike. Thanks for reposting it. So let's get back to our presentation, though, and talk about the TVM. What is it telling us at the moment? What might the trader take away from TVM? Well, first of all, trend. That's the T. That's the T in TVM. And a trader is trying to decide between bullish and bearish might just look at what is the current prevailing trend, and they may apply their own manual analysis, or they might use a technical indicator to assist with that. And with this, we're using a combination of a shorter, sort of an intermediate term, and then a longer term moving average. These are actually known as triangular moving averages, also known as double smooth moving averages. You can see how smooth they are. Gradually, they change in direction. But just as with other types of moving averages, if the shorter term one is rising above the longer term one, in this case, our 50 is above our 100, that's typically interpreted as a confirmation of bullishness. So now the trend can turn on a dime, but for a number of technical traders, once a trend has been established and it's identified, the assumption is that trend is likely to persist unless something big comes along and changes it. So trend is looking bullish right now. So 1 out of 3, check for bulls. What about the other 2, though? Our RSI, which is sometimes used as a short-term indication of value. When RSI gets really low, gets down below 40 in a nice upward trend, that may indicate that that a stock or an index has pulled down and maybe hitting cyclical short-term lows. Now, this is not below 40, but it is interesting. Look at what's happening with price. The highs are going up. Look at what's happening with RSI. Highs are going down. What do we call that? It's a different way to look at that RSI. Rather than just looking at it being overbought or oversold, sometimes we look at the highs and lows. And if those diverge from what price is doing, that may be a signal to a trader who might otherwise be bullish. Hey, hold off, pump the brakes. Maybe don't take as large a bullish position at this point. Stocks might be getting ready to take a little bit of a breather. Yeah, Chris calls it out correctly. This looks like a divergence, and to some, that could just lead to a bit of a pullback. It could lead to a reversal of the trend entirely, or it might be a big fat nothing burger. But let's say that our trader's still bullish, maybe just not as bullish at this point. Still planning to place a bullish trade, but maybe they size down that intended position a little bit. All right. Now, a final note down here on our momentum oscillator is we're getting a pretty similar thing. This is not unusual on the MACD, but it is showing we'd have to squint. Let me zoom in. Let me draw in my line here. And if I zoom in here, it's a little bit easier to see. You can see that we hit a peak. The next one, we didn't even crest above the zero line. So while the highs are going higher on price, highs are coming lower on MACD, couple of divergences on two oscillators. Yeah, that could be a pause button. It could be a size down sort of a signal to our would-be bullish trader. So let's just say at this point, we're that hypothetical trader, cautiously bullish, prepared to move ahead just gradually. All right, so there's the technical backdrop for what's happening with the markets. That leaves us with up to 30 minutes to talk about this new indicator known as the price time filtering bar count indicator or tool. Now, to me, even though that's kind of a mouthful, I would say it actually comes up a little bit short. If I were to rename it, I would call it the price time trend filtering bar count indicator because its purpose is really to identify short-term trends on a daily chart. If a daily chart is what the trader is using, it can be modified to look for longer-term trends on longer-term charts or shorter-term trends on shorter-term charts. But I'm going to clear up our drawing set. Let's switch things up a little bit. I'm going to use an example stock here. Let's go to Oracle, just an S&P 500 company, and let's remove our drawing set here. Pardon me, our study set. Let's just remove all the current studies, and let's add this apparently to everybody new technical indicator. Even though it's been on the platform for a long time, I was thinking, hey, you know what? I haven't talked about this indicator yet. Let me go see. Oh, wait a minute. Nobody has talked about this indicator yet. So I'm going to go load it up. So it's called the price time filtering bar count. You'll notice there's another one. Price time filtering accumulation of volume indicator. I'm not going to go through this one. I will say, just to briefly summarize, the two are so similar, at least in my view, it's not really worth exploring. Conceptually, there's one added layer of complication in the volume indicator versus the bar count indicator because it adds an element of volume. The price time filtering bar count indicator uses a combination of price and a time element as a filter for a trend, and then displays them as bars. Price time filtering accumulation volume indicator also uses volume, but comes to the same conclusion or so similar that there's not enough of a distinction. As a matter of fact, when we're done today, you can go just load up both on your chart if you want to, and you'll notice they look almost exactly the same. A little bit different, essentially the same though. So let's just choose this one. We're going to add that to our chart. We're going to leave the defaults for now and click apply and click OK. There's our indicator. What are your first impressions of the indicator? Actually, in my view, pretty straightforward. We have green bars and we have red bars. We have rising green bars above a zero line. We have falling red bars below a zero line. Rising green means short-term bullish trend. That would be the interpretation here. Falling red means short-term bearish trend. So how are these constructed? Some indicators can be fairly complicated, all sorts of algorithms. This one's not so much. And nice thing is, with most of these indicators, Thinkorswim actually, I don't know if you knew this, but they provide a definition and an example of each indicator right on the platform. So I'm going to go to the education tab. I've already loaded it up here. You can see I'm already on the page where the details of this tool are discussed. I'm going to have to flesh it out just a little bit, just so you know. But really, you just go to education, Go to the Learning Center, which is all about Thinkorswim tools. Art says it looks similar to the MACD. It's kind of, yeah, it does move along a horizontal line, oscillating up above and below a zero line. So does share those sort of surface similarities to the MACD. It's green and red, also similar to the MACD. What it does do that the MACD doesn't do is it makes immediate changes from green to red. It doesn't gradually move down or gradually change direction. All right. But you've seen how it looks. And by the way, to find this definition, you go to Education, go to Learning Center, and then just do a search right up here. You type in like price, time, and it'll find what you're looking for. You just click on that. All right. In any case, that's where we find ourselves. So let's go through this description together, learn this tool together. And I'm going to add a little bit of color commentary here to really help us understand it, because this is a little bit high level, a little bit vague. So it can be useful to have somebody with some experience sort of fill in the gaps there. But price time filtering bar count is a technical indicator designed to monitor trend growth. The study identifies trend direction and plots a histogram using the number of bars in a trend. Okay. Price time filtering bar count identifies trend direction using the following rules. Pretty straightforward rules. We have either an uptrend or a downtrend, and there's a rule for when the trend changes. An uptrend is if the closing price of the most recent period, that's vague, but if the closing price of the most recent period is greater than the high price of the previous period. Now, I have to connect that to reality here. Let's go to our charts. And you'll notice if I go up here and we look at the description of this indicator, what is the period? Price time filtering bar count. It's a weekly period. That is the default on Thinkorswim. So we could go back and rephrase this. If the closing price of the most recent week is greater than the high price of the previous week, that's an uptrend. And then if we have the next week closes higher than the high of the previous week, the uptrend continues, right? Now, when I first learned about this indicator, I was like, oh, okay, this actually reminds me of a trading system I learned decades ago. It was called the turtle trade system. I don't know if anybody does that anymore, but it was looking for changes in trend as identified by highs and lows over weekly periods. It was very popular way back in the day. In any case, that's an uptrend. What do you think is a downtrend? Well, if the closing price of the most recent week, if we leave the defaults in place, is less than the low price of the previous week, trend maintains direction until changed by one of the above rules. So it just keeps going. If we don't get a close with a high above the previous week, but we also didn't get a close with a low below the previous week, it just continues in an upward trend. Does that make sense? You might need to revisit that. Sometimes when I explain it, it helps to go back to the archive and listen to the explanation and then process it for a second while you pause it. In any case, that is creating these bars, and the bars just keep getting taller. The histogram can be interpreted as follows. Positive histogram bars represent uptrends, and negative bars represent downtrends. All right. The size of each histogram bar increases sequentially as long as the trend persists. So we don't really care what the bar value is. It's just really the direction. Is it going up or is it going down? Now, there's a suggestion here. Consider using this indicator with price time filtering accumulation volume, which analyzes cumulative volume for each trend period. You can if you want to. I haven't discovered a lot of additional value in that. In any case, let's look down a little bit further. What are the input parameters? The aggregation period, that's a fancy way of saying what's the size of what's the default time frame. It's a weekly aggregation period. The aggregation period used in the calculations is weekly in this case. And then there's instructions that we can give to the indicator. Do we want to paint the color of the histogram onto the candles? Did you notice that? Let me go back to the chart. When the histogram is green, the system paints the related candles as green. That's what it's talking about. When the histogram is red, the system paints all of the colors as red. And we can either do that or we don't. I will say most traders would just do that. If we don't want to, we could come back up here and edit paint bars to no. So if we want to see traditional candles, so we can do that. So we can still observe, candle behavior through traditional lenses, while still being able to see whether we're in an uptrend or a downtrend. But I would suggest that it's probably going to be easier if we leave that paint feature on. And I'll explain why in a moment. All right, so let's click OK. Let's click apply, click OK again. And that's guys, that's pretty much it. Let's go back here to our education. Down here under plots, we have the bar count, which is the price time filtering bar count plot. Okay, that's just saying that's the name of the indicator. But let's go back to our chart now and talk about how this might be used, how it might actually be tailored to a trader's preferred time frame, and then how it might be combined with let's say a typical companion technical indicator to create a trade system. We're going to create that trade system. We're going to trade it today because this is not an indicator that's intended to be traded all by itself. John says, is there a way to filter and look for stocks that have just changed one way or the other? Yes, John, we could do a scan where we go in and build a custom study filter and we say we want the study to have recently crossed above 0 would be a typical scan. I'm not going to be doing that today. I did that last week with a different indicator, but it would be very similar. Instead, what I typically do is I'll bring up a watch list of stocks that I'm keeping an eye on. And it's not the only way to do it, but this is one way that a trader might do it. And we just click on a symbol and we look to see what's the trend there. Well, this one just recently turned red, for example, on NVIDIA. I'm going to use exactly that approach though, and show how it took me exactly 4 clicks and I found today's trade example. So it took seconds. I didn't have to go build a scan. So let's go back here to Oracle. And now that we understand the indicator, we already pretty much understand how to use it. If the histogram bars are rising, if they are green, that's a period where the trader might be planning and placing mostly bullish trades if they're in that camp of traders who subscribe to the trend is your friend. So this is just one way to identify trend. So if the histogram is going up, that means that the close of the most recent week, so if we're on a Tuesday, we're looking back to last Friday, did that close higher than the high of the week before that? That establishes a trend. And as long as we subsequently don't get a close lower than the previous week's low, that trend just stays intact. RG says the chart is using day bars, and new study is using weekly. Is that okay? Actually, yes, RG, that's not just okay. That is the typical approach. The indicator uses weekly timeframes. The trades are planned using daily charts. I'm sort of skipping ahead, but yeah, if the trader is, let's say they don't trade daily charts. Maybe they trade hourly charts. Well, a typical customization of the indicator is to move it one time frame above the preferred trading time frame. Let me explain that a different way. Let's say that our trader, instead of planning and placing a trade over daily candles, maybe they prefer to use hourly candles. So their average trade, maybe it lasts a couple of days on average, 2 or 3 or 4 days, something like that. And they're using hourly candles to plan their trade. Well, what's the time frame above an hour? A day. If we're trading using daily candles, the time frame above a day is a week. If we're using weekly candles, the time frame above a week is a month, and so on. So let's customize this. Let's say maybe our trader prefers to use weekly candles. If I switch this to weekly candles, while this is using a weekly time frame, it's going to give signals way too quickly. Watch this. I'm going to switch this to a 3-year weekly. Look at those trends. They're extremely short term in the grand scheme of weekly trading. So to customize this, we might come up here to our indicator, and where it's defaulted to week, let's customize that. and shift it out to a month and click OK, click apply, click OK again. And now we're seeing those longer term trends, and the trader might be planning their trades using those weekly bars. Okay. So Joseph says, what about a 4-hour chart? In that case, Joseph, the trader might want to go to a 4-day input period. Okay. So yeah, highly customizable tool, as most technical tools are. So a weekly trader might be trading primarily bullishly during this time frame, might be trading primarily bearishly during this time frame, and back to bullishly most recently. If we were to go to a shorter term chart, let's switch this up to, let's go to an hourly chart, 20-day hourly chart. You can see this hasn't even generated a change in trend and probably won't for a long time. Here, we might want to change our indicator, not from monthly back to weekly, but monthly all the way down to a daily chart. And you'll notice, to go back to Joseph's question, we could have chosen 4 days right there, but we're going to go daily since we're looking at single hours. Click OK, click apply, click OK again. And now we're getting trend timeframes that are more matched to the intended length of trades. Okay, hopefully all of that makes sense. Let's go back to our default. Let's switch our time frame back to a daily chart. Let's switch our indicator back to a weekly default. Click OK, click apply. And now the trader has identified, how they're going to be hopefully spotting trends. How do we plan trades within those trends? They're not very long trends, right? If we're using that, even that weekly view, you'll notice we've gotten a number of trend reversals just over the last 12 months. How many total reversals? 1, 2, 3, 4, 5, 6, 7. So we're getting trend reversals. What does that work out to be? Almost, well, it's less than every 2 months. So if the trader is thinking that they're going to be trading much more beyond a few weeks, then they're probably not going to have time to get into and out of a trade before the trend is reversed and they're getting conflicting signals. So one common indicator that's used in combination with this tool is a 20-period exponential moving average. It's a few weeks long, typically, for an entry to exit signal, or a few hours, or a few days, depending on our, how we've customized the length of our trend indicator. But let's go up here and add a second indicator. Go up to our edit studies. Let's look for an exponential moving average. Let's tailor that to our trend. I'm going to look at a 20-period time frame. Let's click OK, click apply, click OK again. And here's how, actually, there's one other thing that I might do just to make this, I think people like this tool. I like it too. I want this indicator to show me trade signals. Anoop says there are very small red bars. Is it good to take trades on such small bars? The thing is, Anoop, that's a good question. When we first saw this appear, what this will do is, you'll notice this has 5, right? It actually doesn't show up as just 1, because we have to complete an entire week. We have to get to Friday, and then we compare that Friday's close to the previous Friday or the previous week's high and low to establish this indicator. So this actually publishes in groups of 5, because 5 days are in a week. So the very first time we see this red, there'll already be 5. So you might look at this and think, oh no, I'm behind. I didn't notice this indicator. No, it's just normal. You can't just look for one that was like 1 red or 1 green. It doesn't work that way. Anyway, but the thing is, even though these bars are red, this might be in a new downward trend. The trader doesn't know how long that trend is going to continue. So they might just take that trade under the assumption that that new trend that's been identified is likely to persist. And if it's wrong, they need to have a plan for that. So it is consistent with a typical approach to trade even when there's only 5 of these red bars or 5 of the green bars for bullish trades. Good question. But I want to add trade signals to my chart. How do we do that? Do you know how to add trade signals to an indicator? We'll go back up to the indicator. Let's go to our moving average. I'm going to edit that, and I want to show breakout signals. We might think about that as show, if we're using breakouts as trade signals, show trade signals. So let's change that to yes, and click OK, click apply, and we're done. And what this is doing is that the system is now automatically showing every time that price crosses above our 20-period moving average, which is a common entry signal for a bullish trade, and it's showing an indicator for when price crosses back down below our moving average, which is a common exit signal for a bullish trade. But this is where our trend filter brings in an element of confirmation. Well, I want to look at this recent entry signal back here in April. We got a cross of price above our 20-period moving average, exponential moving average. For some traders, that might be an entry, but for traders using the price time filtering bar count tool, the trend was in conflict with that entry. Now, that doesn't mean that the entry needs to be dismissed out of hand. Instead, we might wait for confirmation. And this is where keeping the candles painted, the color of the indicator, might be helpful. What we'll notice here is the trader might see this and say, ooh, I'm getting a signal. I just need trend confirmation. And then bang, we have trend confirmation here. And that might be when the trader takes that entry signal. That's it. So the signal, though, is just having the trend green and having a signal of a recent signal on the 20-period exponential moving average. The exit does not need to wait for a confirmation. If we get a red arrow crossing down, price crossing down below our 20-period exponential moving average, that's the exit. So Deepak says, how do we set alerts? Deepak, I could set up an alert. I don't have time to go into that today, so my apologies. It is possible, though. Anyway, might just need to experiment afterward. But in any case, I did want to plan and place an example trade here. So let's go back to our watch list. And, somebody asked earlier, how can we do a scan for these sorts of things? Well, we can, or we might just bring up a watch list and click through and see if there are recent trade signals. And actually what I noted here on Amazon, fourth stock in our S&P 500 list, and these are just organized from largest companies down to smallest. What's the trend signal on our price time filtering bar count tool? It's positive, an upward trend. Price just popped above our 20-period moving average. There's our entry. It's pulled back a little bit today. We're down about 1% from yesterday's close, but still that trade, that signal is there. So I'm going to go ahead with a trade here, but we need to have a plan for when to take profits and when to take losses. Well, we don't know, if we're using this approach, when the ultimate exit signal will appear. The typical exit signal is just when we get a close or when we get a cross of price down below our 20-period moving average. So I'm going to make a note here. Let's just say up here, sell on bearish 20 EMA crossover. That's for taking profits. Where might the trader plan to take losses? Because we have to be aware that this trade just may not work out. Well, if the reason for taking the trade was that price crossed up above the 20-period moving average, our trend is green, a signal that might be failing is if our lows start to go lower. This is all about establishing highs and lows, right? So a common exit is we look to a recent low just before the signal and place a trade just below that. And you can see that a lot of the time with a lot of these sorts of oscillating trade signals. Putting a stop below recent support. What was that recent, or putting a stop below recent low? Let's go 1% below that recent low. That was at about 222. That would put our stop a couple of bucks below 222. That'll be just a shade below 220. Let's put it in there at 221.75. Or pardon me, 219.75. Work on my math there. Sharon says, why are some of the green and red candles are not filled? So that still represents open and close prices, where we got the close relative to the open, Sharon. But that's it. Pardon me. A solid candle indicates the price fell from open to close. An empty or hollow candle indicates that price rose from open to close. Right? So here's going to be our trade plan. Let's buy some shares. Trader needs to decide how many shares they want to buy. We're going to have a stop down here at 219.75, about 1% below that low if we wanted to. Should we get more precise than that? Why not? Low is 221.83, 221.83. Let's multiply it by 0.99. You can see it's going to be close. 219, okay, 61. Let's do it there. A few pennies off from what I calculated. That's okay. It's just an example anyway. Not every trader is going to go 1% below. They might go $1 or $2 below. They might go a few percentage points below. But the purpose there, though, is to just define where the trader thinks this trade isn't working out and then draw that line in the sand. Let's go to our trade tab. I'm going to click on the ask price. Let's buy about 20 shares. Keep it in the neighborhood of $4,000 to $5,000 for this investment. Right click, put in a custom buy order with a stop. Let's do 20 shares. We'll click on the little broken chain link. That's going to pair up the buy order with a sell order so the quantities match. Let's put in a market order with a stop down there at 219.61. 1% below the recent low. Good till canceled. But our hope here is the stock continues higher. And if we get a subsequent bearish crossover of price falling below that 20-period moving average, that's when we'll take our exit. So that's where we'd hopefully take some profit. Let's click confirm and send. Going to buy 20 shares of Amazon at the market. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So it's trading right at about 233. We might have to pay more than that. Could be less. We'll see. With stop orders, there's no guarantee that the execution price, the price we actually receive if the stop is triggered, will be equal to or near the activation price. In this case, that's a 219.61 activation that would trigger a market order, and we might sell for less. Let's send this order off. No commission on this trade. There can be on some types of trades. So let's send that off. And we should get quick fill because we put this in as a market order. And yeah, look at that. Paid 14 cents less than the 233 we were talking about at time of order entry. But guys, that is how a trader might use this price time filtering bar count trend identification tool to plan and place a trade in combination with another technical indicator. So we've done it. First video is in the books for this exclusive tool, only found on Thinkorswim. I hope you enjoyed that discussion. This is what we do, though, on Fridays. This is advanced charting techniques, and we explore things in maybe new ways that some traders might not have considered before. So hopefully I will now, S says, do you have an approximate profit zone? I have no idea. We could go up for a long period of time. It might just be a short-term trade. Time will tell. But guys, this is what we do on Fridays. I hope that you'll join me again next Friday. I'm going to let you go enjoy the rest of your weekend after you watch a couple more of our webcasts. But just be aware that you have some additional resources outside of these live streams. Number one is if you haven't subscribed to the Trader Talks channel yet, do that now. Go down and click on that subscribe button. It only takes a second, doesn't cost anything. But the Trader Talks channel is where we house previous webcasts like the ones that I've discussed. You can join those or find those under our playlist. You can join the live streams here, or you can even do keyword searches for webcasts addressing very specific topics of pointed interest for you. Also, make sure that you're following Mike and me on X. You can find Mike on X at Mike Fairborn CS. You can find me on X at Cameron May CS. I wonder how many of you would know the answer to this question. Let's see who's really been watching our Schwab Coaching webcasts. Which coach's voice rings in your head when you hear, just real quick, the biggest actually thing is, does anybody recognize that? Who is it? Leave a comment there, see if you recognize that coach. Anyway, you'll know who he is. Dang it, gave it away. At least narrowed the field for you. Anyway, best place to connect with us is right here on X. Hey, everybody, thanks for filling out that survey. I will read that data. I read those comments. It's always appreciated. Thanks for reposting it. And thanks for the thumbs up, guys. That's always appreciated. I can see 150 people watching. 59 have already clicked that thumbs up. That's like applause to your presenter. It also gives a boost to the presenter's webcast in the YouTube algorithm. So to help more people learn about these sorts of tools, and this one needs some additional help because there is no other like it out there on YouTube. So give it a thumbs up, help more people find it. All right, thanks a lot. I will see you next Friday. I'll see you in some other webcast in between now and then. I'll also look for on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.